We will take the last question.
I'll just shout. So we've talked about economics, we've talked about Japan. There's recent debate about the general, shadow banking system at risk in the China banking system sector. I was wondering if any view from IMF, how serious it is.
Yeah.
Does it pose real risk?
So we are concerned. We are concerned, and I mean, there's a few charts in here which you can look at later. But I mean, the bottom line is that why is this happening in China? It's happening because for a couple of different reasons. First of all, macroeconomic policy is too loose, generally. And we're not just talking about monetary policy, we're talking about fiscal policy. So there are huge amounts of local government borrowers who don't care what the interest rate is because there are very soft budget constraints. And the demand for credit is huge. And that's driving a very strong and sustained investment boom. So, we measure the fiscal deficit in China not to be the 2% that the central government reports, but if you add all the local governments, the fiscal deficit in China is close to 10% of GDP. Now, that's a really big number. That's Greece style. Now, I'm not saying China's Greece by any means. I mean, there's clearly a huge difference, but it's a very, very big deficit. This is very, very loose fiscal policy. And of course, it's being accommodated by monetary and credit policy. Fine, okay, that's one side of it. But the other side of it is that there are huge numbers of constraints on the banks. You've got interest rate controls, you've got loan-to-deposit ratios at 75%, you've got all sorts of capital constraints, you've got constraints on who the banks can lend to. You're not allowed to lend to property developments or steel companies. And so what happens is a lot of this credit is being forced off the balance sheet, and it's pure regulatory arbitrage. And it's getting to the size where it is becoming a risk for a couple of different reasons. First of all, it's going to places that are typically at the weak end of the credit spectrum, overcapacity sectors and real estate. And secondly, it's not being regulated or supervised, at least not like it is on balance sheet for the banks. So it's probably not the number one risk in China, that's the property market, but it is certainly a very big risk and one that could amplify any stress that we see in the property market. So what do they do about it? Well, what they've tried to do is just put more and more regulation in place. Lots of rules and lots of supervision, and you can do this and you can't do that. Of course, what happens? Water flows around a stone, right? And the banks and the financial institutions find different ways of doing the same thing. So our policy advice to the PBOC and the CBRC is, sure, I mean, regulation and supervision is like motherhood and apple pie. It's always great, If it's well designed, we welcome it. But you shouldn't just keep focusing on that. What you should actually focus on is dismantling some of the constraints on the formal financial sector. Let the banks compete for deposits. And then you won't have this crazy situation where you have yields on wealth management products offering about 6%, and they're considered to be risk-free because they're implicitly guaranteed by the banks. Impose deposit insurance, let banks compete using deposit rates, and then people know what's guaranteed and what's not. Don't impose constraints on who banks can lend to. Or if you do it in a well-designed and very transparent way. But don't sort of try and impose constraints that you can't lend to these type of borrowers, because then the bank will just take that money off balance sheet and lend it through some sort of another intermediary. So the general solution that we have is that you should actually increase the liberalization of the financial sector, and that will actually reduce the risks of shadow banking. And I think sometimes people think that that's counterintuitive. Normally, when you have a very flourishing shadow banking sector, you need more regulation and more supervision. In some cases, what you actually need is less constraints and more liberalization, and get some of this activity back on the balance sheet where people can see what's going on, people can regulate it, and people can supervise it.
Thank you, Mr. Roache.